In this illustration, it says balance sheet of a firm as on 1st 2003 and 31st 3 2004 were as follows. So they have given the opening balance of the assets and liabilities, as well as they have given the closing balance of the assets and liabilities also. So before we start to record the amounts whatever given in the balance sheet, we have to consider the additional informations first. So let's see the additional informations whatever they have given. One is that during the year a machinery costing 10,000, accumulated depreciation 3,000 for that machinery, so was sold for rupees 5,000. We have to calculate in this machinery in case they have sold the machinery, so they got profit or loss on this sale. We have to calculate that one first. The cost of the sold machinery is 10,000, so we'll record the cost of sold machinery first. $10,000, and the accumulated depreciation is there 3,000, so we have to deduct that 3,000 amount because already depreciation is there 3,000 for this 10,000 amount machinery, so we will deduct. $3,000. And the other thing, it says the sales price of the 10,000 costing machinery, the sales price is 5,000, so we deduct that amount also. This is the cost of the machinery, so after deducting these things we'll get profit or loss. Calculate. $2,000 loss on sale of machinery. So let's see the next additional information. The provision for depreciation against machinery as on 1st 4 2003 was rupees 25,000, and on 31st 3 2004 rupees 40,000. This information is the opening balance of the provision for depreciation account as well as the closing balance, both has given here. So we have to prepare one provision for depreciation account for calculate the depreciation of this particular year. So we will open provision for depreciation account. So opening balance is given by balance brought down $25,000, let's record the closing balance also. To balance carried down 40,000. And we have to include this adjustment also because already there is a 3,000 accumulated depreciation we deducted from the provision for depreciation account and we added to the machinery account because the 10,000 machinery was sold. This 3,000 accumulated depreciation for the 10,000 valuable asset. So it has sold already. So we have to deduct this accumulated depreciation from the provision for depreciation account. To machinery account 3,000. We have to record this machinery because we have given the description as machinery account because we are going to record this opposite entry of this entry in machinery account because the 10,000 machinery has sold, that accumulated depreciation has to be deducted from the machinery account. We'll record that amount here by provision for depreciation account 3,000. At the same time, we have to deduct the amount of machinery 10,000 because of the 10,000 machinery has sold. But it has sold for the sales price of 5,000. So we receive only 5,000 cash. We'll record the 5,000 by cash 5,000. And the loss on sale of machinery is 2,000. So we have to record the 2,000 also from the machinery sales of machinery. Company has met a loss by P&L account, profit and loss account, 2,000. After recording these entries, let's record the other additional informations. They have given net profit for the year 2003 to 4 amounted to rupees 45,000 and income tax paid during the year rupees 1,000. So we have to record this information in cash flow statement. First thing is cash flow from operating activities. Under this category, it comes first thing is net profit after income tax. $45,000. But in this case, first we have to add the income tax, what's the amount has paid by the company. So last step of the operating activities only, we will deduct that amount from the net profit. So there is an amount of 1,000 has company paid as income tax for that particular year. So we have to add that amount. It's already deducted from the net profit. So we have to add that amount. Income tax 1,000. So we will get the amount profit before income tax. So we have to add the loss on sale of machinery with the profit before income tax. We'll add loss on sale of machinery. $2,000. And the next thing, so in this case two things only we have to record. One is cash received, though that's we have to record in investing activities, so we will record next after finishing the operating activities. First record the operating activities things, whatever include. So in provision for depreciation account, we can see here there is an 18,000 of depreciation for the particular year. So depreciation amount usually deduct from the profit and loss account from the profit. So it's already deducted. We have to add with the net profit 18,000 because the depreciation is not a cash transaction. $18,000. This one also okay. And we have to see next one. There is a drawings 17,000 cash drawings. So this is related with the financial activities. We have to record in financial activities only. So let's calculate whatever we added here in operating activities. $66,000. This is operating profit before the working capital changes. Working capital changes. After that we have to include the changes of the working capital. What are the changes? Check here. Except cash, we have to include all working capitals. One is debtors, machinery is then fixed asset, so and land buildings are fixed assets, and stock and debtors are here current assets. So these two items we have to include. First is debtors increased. So when a current asset increase, at that time cash outflow happens. So we have to deduct the amount, increase amount of the debtors, 20,000. Increase in debtors, $20,000. Deduct the amount. And next one is stock reduced 35 to 25,000. So that 10,000 reduced. Whenever a current asset reduce, at that time cash inflow. So we have to add that amount. decrease in stock 10,000. So current assets are finished. We have to check whether any current liabilities are here or not. One, creditors are here, and the loan, it's not the current liability, and loan from bank also not current liability, so there are capital. We have to record the increase of creditors. Whenever creditors increase, that means current liabilities, when it increase, at the time cash inflow, so we have to add this amount, increase amount, 4,000 increase in creditors. Increase in creditors 4,000. After that we have to add this amount. $60,000. Net cash flow before income tax. We have to deduct the income tax paid amount. Because we paid already, cash going out 1,000. It's already added here. We have to deduct here. $59,000. This is the amount net cash flow from operating activities. Net cash flow from operating activities, 59,000. Next one is cash flow from investing activities. Investing activities. So in this category, first whatever the adjustment we have done, we have to see is there anything to record in this investment activities. There is a machinery account we prepared, so there is a cash of 5,000 we received because of sale on machinery. So that's a cash inflow we have to add. Sale of machinery. Sale of machinery 5,000. In other case, we have to check in the balance sheet. Machinery already recorded. So land, it increased. So land purchased, because opening balance 40,000, closing balance 50,000. There is no depreciation or nothing has given land. So we have to add the 10,000, the land purchased. We have to deduct this land purchase amount because of cash is outflowing. 10,000. Next thing, buildings. Buildings also increased. Opening balance 35,000, the closing balance 60,000. So there is a 25,000 increased. So we have to deduct that amount also because buildings purchased. Purchase of building 25,000. There is no more investing activities in balance sheet. So we have recorded all investing activities. Let's calculate the amount. 25,000, 35. 30,000 minus. This is the net cash flow from investing activities. $30,000. So the next and last one is the cash flow from financing activities. Activity. In the financial activities, we have to check is there any additional information regarding the financial activities. So first is in capital there is a drawings of 17,000 cash drawings. So cash is going out, it's taken by the owner. So we have to deduct that amount, cash drawings. $17,000. And from the balance sheet we find here there is a loan from Mrs. X, 25,000 opening balance. At the end of the year there is no amount, so it's completely paid by the company. So 25,000 goes out. We have to deduct that amount from the cash flow statement. Paid Mrs. X loan. $25,000. Another one, there is a loan from bank, but it's increased at the end of the year, so we received more money. 10,000 it increased. So cash inflow in this case, because we are taking cash from the bank, so we have to add this amount in the cash flow statement, 10,000. Loan from bank, 10,000. So we added all financial activities and everything, so we'll calculate the amounts. $32,000 minus, this is the amount net cash flow from financing activities. activities 32,000. So finally we have to calculate these three amounts from these three main categories. Sorry. Minus 3,000. This is the amount net decrease in that particular year, net decrease of the cash and cash equivalents. Equivalents 3,000 minus. So in this amount we have to add the cash and cash equivalents at the beginning of the year. At the beginning in financial balance sheet we can find that amount 10,000, as well as at the end of the year 7,000. So at the beginning of the year 10,000. After adding this amount, you will get the amount of the cash and cash equivalent at the end of the year. So 7,000. This is the cash and cash equivalents. At the end of the year. $7,000. So after recording and calculating these and every amount, we have to check whether the cash and cash equivalent at the end of the year is equal to what is the amount has given in balance sheet. If both are equal, then the calculation is correct. If both are not equal, so some amount has recorded wrongly. So we have to check finally whether the amount is correct or not. The 7,000 is given in balance sheet as the closing balance of the cash account that particular year. So the same amount we got through the cash flow statement. If you have any doubts regarding this subject, please comment below, as well as press the subscribe button and bell button so you will get our new and upcoming videos.